Now, everything comes with a degree of uncertainty baked into it these days, doesn't it? But when it comes to UK small caps specifically, our analysts think that there is an emerging picture. Here to talk about it is Henry Ince from our manager research team. Henry, thanks so much for being with us.
Thank you very much, Ollie.
First things first, can we just define what we think a UK small cap stock looks like in terms of market cap?
Sure. So small caps are typically considered to be the bottom 10% of market cap. This will vary depending where you invest, but just to put some numbers on it, in the UK, the average fund in the UK small cap equity category, the average market cap's around 750 million, compared to Europe where it's about 1.8, and in the US it's around 4. So it's quite broad. Most active managers are typically investing from about 100 million upwards, because the lower you go, the more liquidity challenges appear.
Okay, and would it be fair to say that confidence in UK small caps is increasing as some of those global macroeconomic headwinds also increase and people look to diversify?
Yes, I mean, it certainly feels like investors are a little bit more excited. I mean, anecdotally, I've seen a lot of commentaries and asset managers coming out highlighting the bull case for UK small caps. When we speak with managers, it feels like client activity is ramping up in terms of RFP requests, but it still feels like people are waiting for a little bit more evidence, and it feels like people are sort of waiting on the sidelines. And performance, a pickup in performance would really help.
Yeah.
I mean, if you look at global equity markets year to date, in sterling terms, they're roughly flat. Large caps in the UK are up 10%, small caps are up 5%. So, there's something to consider, but I think it will take a little bit more to start seeing that really result in inflows.
Interesting. And so this comes against the backdrop, doesn't it, of some quite significant shrinkage in the AIM market. So surely then this is also a concern that investors are going to look at when it comes to the health of UK PLC.
Yeah, I mean, it's a good point. I mean, I think congratulations in order and a happy birthday to AIM. It celebrates its 30th anniversary today.
What a day.
And I mean, AIM has added a lot of value to the UK economy. It's supported hundreds of thousands of jobs since launch. But the initial purpose was to incentivise companies to list with, lower regulatory and financial burdens. And many of the companies that have left in recent years have cited, excessive costs and red tape as some of that reason for leaving. There's also been a lot of takeovers. And to your point earlier around, people getting confident, the pickup in M&A activity is a sign of confidence from, particularly international investors and private equity.
Yes.
And that sort of value opportunity is a sign of confidence. But if we put some numbers around AIM, at its peak in 2007, there were around 1,700 companies, and today there's around 650. A lot more are looking to leave potentially. Some are looking to go to the main market where they will get potentially greater media coverage, more analysts looking at their numbers, and just greater pools of liquidity, which is an issue potentially with AIM, and also will get picked up by some index funds. So I think it is a concern with AIM, but I think it's also
Perhaps a sign of the times, I guess.
I think, the broader UK market in general is, if you're a management team sitting there right now and you're looking to list, the attractions of listing in the UK versus the US, that's a big decision. So it is a concern, but, managers we speak to that invest in AIM, there are still plenty of high quality companies. So it is an issue, but the FTSE small cap index has also been shrinking, and what we really need is some new blood coming to the market through IPOs, which has been fairly muted.
A challenge, yeah, sure. In terms of the actual bigger macroeconomic picture, what's your take on how well shielded UK small cap stocks are from that broader tariff disruption? I mean, looking at some of those specific funds, how are they faring and what's their outlook?
I think so. It's a known unknown, right? What we do know is that tariffs tend to be inflationary. So firms without pricing power and the ability to pass on increased costs may struggle. But what we also know is that Trump tends to like the UK, and he's mentioned around future tariffs we're quite well protected. Obviously, there's no certainty around that, but the 10% tariff that's been levied on most UK goods isn't as significant and as high as we've seen elsewhere in the globe. And also UK and US trade isn't also as significant as with other regions. Then there's the question around this uncertainty deterring businesses from investing. But what I would say is that UK small caps in particular, a lot of their revenue is generated from domestic sources. So unless you're an exporter, the risk is lower. But also, I think it's worth bearing in mind that, management teams have had to deal with a lot of uncertainty in the last few years. We've had COVID, we've had the mini budget, we've had higher rates, higher inflation, Brexit, supply chain issues. So management teams are quite well positioned to deal with shocks. And I think there's been a lot of work and a lot of experienced management teams should be able to navigate these difficult waters, Ollie.
Thank you so much, Henry. For more on UK small cap stocks and indeed all of our analytical output, check out morningstar.co.uk and indeed check out our new website, which is coming very, very soon. Until next time, my thanks again to Henry. I've been Ollie Smith for Morningstar.